Thanks very much, guys. Ooh, it's a bit loud. We're going to continue on the subject of finance. We have a very interesting guest who has actually been to the Ethereum London meetup, I'm glad to say. And that's Matthew Newton from eToro. He's a senior UK Market Analyst, and he's going to talk to us about the evolution of crypto investment over the course of the last year based on their experience, right? So thank you very much. Enjoy. It's going to be a great presentation. Matthew? Give him a hand, guy.
Thanks, Stefan.
Round of applause. Come on.
Are we good for sound? Can you hear me? Okay, perfect. Afternoon, everyone. I am a market analyst for eToro UK, but I also operate on the client-facing side of things as well. So for the last 18 months, I have been speaking non-stop with our crypto investors. So we've got some good insights into how they think. So it's great to be presenting the evolution of the eToro crypto investor and ourselves today. We've had some great speakers already on stage. A lot of value has been delivered, so I hope that we can do the same. For the last 18 months, we've been on this wild and exciting ride. In 2017, we really had no time to think. Things were moving so fast. And we were in a situation where we were just trying to navigate with this crazy mania that was taking place. And now, thankfully, we've had a chance to breathe now that things have settled, and we've had a chance to regroup and really scale up our operations so that we're ready for the crypto mania whenever it decides to return. So before we get into the presentation, just to give you a little bit of background on eToro and some key stats. We're traditionally a regulated multi-asset platform that always had a favorable view on cryptocurrencies. We added Bitcoin back in January 2014, right after the mania of the previous cycle. So we're kind of in a similar situation now as we were back then. And in that time, we've managed to become one of the largest retailers, not just on the European level, but also on a global level. So in terms of our evolution, we've come a long way, and sometimes there's a bit of confusion as to what it is that we offer. There's been thought that it's just CFDs or is it crypto, but just to clarify, up until recently we have offered CFDs, but for just under a year now, we have been offering the underlying asset instead of the derivatives. So. And we're also proud to announce that we are now offering physical share trading as well. So as far as we know, we're the only entity in the world to be offering investors the option to invest into both assets. And worth pointing out that you can now trade UK shares as well without paying stamp duty. But we were founded in 2007, and we celebrated our 10-year anniversary toward the end of last year. And in that time, we've managed to grow to over 10 million users. And just to put that into a little bit of context, when I joined the company just over 2 years ago, we had 4 million users. So there's a beautiful collaborative network effect taking place. The eToro network has always brought new investors to Bitcoin and educated them on cryptocurrencies, and then vice versa. We managed to really benefit from the crypto awareness that took place in 2017. We're operating in over 140 different countries, and we've now opened offices recently in Hong Kong, Australia, and we recently announced our move into the United States, so a big push forward by ourselves. We've over 500 employees, 1,500 instruments and growing, and offering 10 cryptos. We've more on the way, and also at Consensus, we announced that we're launching an exchange, a wallet, and also OTC services, so really, really pushing out into the crypto world. But there's different ways that you can get involved in crypto on our platform. You can do it the traditional way, manually invest, or trade over the short term, or you can utilize what we're known for, the copy trader. So eToro has this open and transparent database where you can easily identify the traders and the investors who are making profits. And at the click of a button, you can copy their portfolio. So every action is mirrored in your portfolio. You've outsourced all the decision making. And then lastly, we also introduced our own investment portfolio strategies, copy funds, towards the end of 2016. And this was actually what we started off 2017 with. This was our major push. And then the crypto storm happened and we steered straight into it. But our copy funds have been a great success. We've delivered a lot of value for our investors. And what we're really trying to do is leverage technology and this giant database of trading activity that we have to use predictive data analytics to try and forecast what traders are going to or could make a profit in the upcoming period. So the copy funds have been a major success for us, but they kind of got buried underneath the crypto madness last year. Now, in Q1 of this year, we really wanted to reach out and see what the average investor or what the average person thought. So we conducted a survey and asked 2,000 people across the UK what terms had they heard of. So unsurprisingly, FX was the top return with 49%. Bitcoin was second with 43%. Mining was 23%, and then surprisingly, cryptocurrency only at 20%, ahead of Ethereum with only 9%. So 30% had heard nothing, and if you can't see there, quantitative easing was the last one that was on the list, and 20% said about 20% said they had heard of that. But we then asked the survey, the people in the survey who knew about cryptocurrencies, did they feel that regulation was needed? Surprisingly, only 20% said no. So that tells us that there is still a feeling amongst the average investor out there, the average person, that cryptocurrency does need regulation for it to move forward. And lastly, 6% of the survey said they had bought cryptocurrencies. So based on that, you can see there's still a lot of room for growth in that regard. So the next thing we wanted to know was the profile of the people that were getting involved in cryptocurrencies. So in Q1 of last year, we said it was the Shoreditch crowd, the techies, that really were ahead of the pulse in this sense. Ages between 18 and 35, young, single, renting with others, interested in IT and tech, and based around urban locations. By Q2, we started to see that Ethereum was really taking hold and catching people's attention. We added it just around the end of the end of February, early March, and there was a lot of interest and a lot of money started going into Ethereum around then. So we got a few more early adopters come in. Age range went up, 22 to 37. Again, people renting, tech enthusiasts, and a little bit more savvy in terms of what they're looking for in the market. By Q3, Bitcoin had started to flip on Ethereum. Ethereum was struggling. Bitcoin started to move again, and we got that flip. And Ethereum was no longer the most traded asset on the platform, or the highest traded asset on the platform in terms of crypto. Bitcoin was again. And we started to get tech investors, people who've been investing in tech stocks, so a little bit of an older age profile, 30 to 45, more of an investment history, higher appetite for risk, and again, another tech savvy, more tech savvy, looking for fintech opportunities to get value out of the market. And then in Q4, when things got a little bit nutty, and at this point your grandma was probably asking you about that Bitcoin and how can she get involved, we had the fiercest and the most intense wave of what was, I like to say, was a 4-wave experience in terms of crypto in 2017. It was the XRP wave, and people came in, and that was really the culmination of a blow off top. So it was a mainstream investor, again, 30 to 45, living in detached homes, higher disposable income, and really pushing out into that commuter belt. Oh, and by Q1 of 2018, this is what the average eToro crypto user looked like. 88% were male, average age of which average age was 36, working in IT, finance, sales and marketing. 12% were female, of which the average age was 38, works in finance, sales and marketing, so a similar demographic, but outweighed in that sense. So here's where things really get interesting. On the left-hand side is where we can see the different age profiles and where they're putting their money, what are they investing in. Across all age groups, we can see that XRP has the highest exposure and highest investment on the eToro platform at the moment, and it's still the case. Second is Bitcoin, third is Ethereum, and again, there's not much of an overlap in terms of age groups there. There is a little bit with the fifth and sixth place, which is Dash and Bitcoin Cash, but in general, it's pretty linear across the age groups, who's in what. What I would say at this point is, that's really just a snapshot of what things were like when the bull market really came to an end. Because as I alluded to earlier, there was 4 periods or phases over the course of the year where clients were really hot on a particular cryptocurrency. The first one around December 2016, January 2017, Bitcoin was starting to approach the previous all-time high, so there was a lot of interest in it. And I got back from my Christmas holidays, and I remember speaking to clients on the first day, and everyone was talking about Bitcoin, and I hadn't experienced that before. And I remember shouting around the desk, short Bitcoin, there's no way this is going to sustain. Everyone's talking about it. Of course, we had a 30% drop after that. We all got a bit of a chuckle out of it. But what we didn't realize, there was something bubbling there. There was the sign of things to come. We added Ethereum, and it was fully live by the beginning of March. And mid-March to late March, there was just a lot of money coming in, and it was really hot for Ethereum. Within a couple of months, we knew something serious was going on. It was nothing like we'd ever experienced in our history. And we were barely able to keep up. And Ethereum really dominated Q2. But as I said earlier, Q3, Bitcoin flipped, and that was the dominant cryptocurrency right up until the end when XRP had that really short and sharp appreciation that went to 350. And they were certainly the most partisan and dogmatic crowd that came in. Experience level, if you can't see that, the green area is novice. So the majority of people that were coming in had no investment experience whatsoever, let alone any cryptocurrency experience. They were just diving straight in, learning later, but they just wanted to join the crypto party. Intermediate, the intermediate is the orange, and then blue for the advanced traders on our platform. Jobs, computer science or computer and tech, number 1, no specification. Number 2, sales marketing, student, funnily enough, and then finance. They were the main. There is a wide demographic there, but they were the main ones. And then lastly, we touched on it earlier, the gender split, overwhelmingly male, but we do see a lot more female users coming onto the platform every day. So again, this is an interesting one. This slide, what we're really trying to say here is, what were people interested in earlier in the year in comparison to the end of the year? So this is really search terms from selected users in comparison to Yahoo Finance searches. And in the first one, you can see that Bitcoin is the top one. It has 3%. But what that means is people looking for Bitcoin information. They just want to know about it. They're trying to understand it, trying to learn. We're seeing some FX pairs coming up there, some crypto and fiat pairs as well, Bitcoin price. But that one is really more on the educational point of view. And then by Q4, it's all buy Bitcoin, Bitcoin news, Ethereum price, wallet. What this means is that people just were getting involved. They were making transactions. They wanted to know how they could store cryptocurrency. It was a much more hands-on approach. People just wanted to get into cryptocurrencies and get into it now. And then over on the right-hand side, again, it's just the demographic. You can see the XRP is way out in front, particularly popular amongst the younger demographic, but all demographics still number 1, Bitcoin number 2, and then Ethereum. And surprisingly, Ethereum Classic just had the nose on Bitcoin Cash as well, so I found that pretty interesting. But again, what we saw was that people were coming to our platform looking for Bitcoin, and then they were branching out, finding the other ones, but it was just Bitcoin that was in the news. And XRP was the one that was the big winner. That just exploded, and because we have the social platform, you know, so it's like a snowball effect. It just gets bigger as time goes by. Then just a distribution. Where are our investors based? Unsurprisingly, you can see a high concentration in the southeast, and our top cities were London, Manchester, Birmingham, Liverpool, Bristol, Brighton, Cambridge, Leicester and Leeds. All little tech hubs in their own right, but you can see that there's a nice distribution, a nice spread across the UK. Everyone's really starting to get involved now. So we get asked this a lot. What's going to be the key catalyst for the next Bitcoin price rise? 2015, we had 60%, 135 in 2016, 1,300% 2017. We have a long way to go in 2018, but what's going to push it? Well, we believe it's regulation. Regulation is probably what's going to be the key driver to get the bigger players in, the bigger money, the institutions. And actually, I was at a private banking event last week, and really all we were doing was just going down to see, were they interested? Was it topical? What were they saying? And while cryptocurrencies did come up, it was kind of brushed aside, and it was more blockchain based. But what was clear was those stigmas that exist are the ones that are still thrown about. So money laundering, illicit operations, essentially, and drugs, all this type of stuff. You can see that they're interested, but the key theme from it was reputational risk. So they don't want to risk their own reputations, essentially, for something that just still seems quite distant from them. So regulation, I think, is probably what is going to be key for the next big push forward. And also, as a regulated entity, a large regulated entity in the space, eToro feel we have a duty of care to help and assist the community and the regulators with the education. And that was the key motivator behind bringing all the top crypto players in London together to form Crypto UK. And that way we can help ensure that we get a more measured approach taken with the regulators. So caveat, this is a bit old, and regulators are quickly changing their tune quite a lot, but what we're just trying to convey in this one is that different jurisdictions are taking different approaches, from the benign to the downright crackdown. I mean, China change all the time. So it is a case of just education, helping. If you were here before, I'm sure you heard some good regulatory insights, so there's no real need to go down that route, but yes, we believe regulation is coming. If you want to know more, here's some resources that you can check out, but what I would encourage you to look at is Crypto UK. So as we draw to a close, if we can give you some insights from ourselves, what also is going to be a big thing that we might see in the next 18 months? Well, the big chatter around our office is the tokenization of real-world assets on the blockchain. What can we put on the blockchain? What efficiencies can we create? What waste can we remove from our business processes? We can start with the traditional assets, stocks, real estate, gold, commodities, fine art. I don't know if you were paying attention last week, but there was an article circulating around Andy Warhol is a Bitcoin star for 15 minutes. Thanks to blockchain, anyone can own a tiny part of a masterpiece. They just can't touch it. Is this a sign of things to come? We believe so. I mean, all this really is giving anyone with an internet connection, anyone with a mobile phone, the opportunity to invest in something that traditionally is quite hard to do outside of the top 1%. So fine art has been a great diversification play for, the top 1%, but a bit out of reach for your average investor. But what it means is they can just break down something like this into fractional or fractal tokens, and anyone can add a bit of ownership of such a. They may not, they may not want to touch or to own such an item, but they just want to have a little bit of that ownership in their portfolio to diversify. So again, this is something that we feel is going to pick up pace and really start to get a bit more traction over the next 18 months. And lastly, evolution, of course, takes time. We can see that up until now, the technology has led the way. Last year, we saw investors start to really catch up. It's out there amongst the wider public. Regulators, of course, were always going to come when the investors piled in, and then consumers are looking for ways of how they can get cryptocurrencies or crypto assets into their day-to-day operations. So I think what we'll see is working technology really start to lead investment. So up until now, it's been basically ideas, but there'll probably be a bit more required from companies than just putting out a white paper. We're already starting to see some of our pre-2017 projects come online, Augur, Siacoin, Golem. So this will probably start to be more of a requirement in the coming years. And that's it from me. Thank you very much for listening to me today. If you want to talk more, you can email me or follow me on Twitter at MatthewNewton87, or I'll be hanging around for a little while longer if you do want to have any questions and come and have a chat. Thank you very much.